Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Thursday, September 6, 2018. Before we get started, two quick admin notes. Number one, on the YouTube channel, keep in mind, and I always post this on the site on rightsideofthechart.com under the videos, that you can increase the playback speed. Every video I watch on YouTube, I don't know, maybe I'm an impatient person, but a lot of them are dragged out. I go to the settings, click playback speed, and increase it to, usually I go to 1.5 times playback speed. You can do 1.25, and it helps get through these videos a little bit quicker if you're pressed for time, or if it's a lot of the same old, if you've been up to speed on my recent videos, and some of what I cover is really a recap of what's happened recently. So again, playback speed to increase the videos, cut down the duration. And the other thing is, keep in mind, I don't, and I've said this before, I'm not able to reply to the majority of the comments on the YouTube channel. My focus lies in the site for my paying members, subscribers to Right Side of the Chart. But I do appreciate the comments and the feedback I get from the YouTube channel. Every now and then, I don't know how it works. YouTube will send me one of the comments, a notification to my email. Got one the other day, somebody asking for an update on the markets because it had been, I did one, I think it was a few days ago, didn't do one the next day, video format. Right side of the chart has both free and premium content on the website. And a lot, what you're seeing here on the YouTube channel is a small fraction of what I post. 99% of the commentary, charts, trade ideas, everything is within the trading room. The public videos on the YouTube channel are only broad market general analysis, the U.S. stock market. Trade ideas, sector analysis, gold, commodities, all that, that's reserved for members. And those are often produced in videos that are private videos on the site. But what I wanted to get at, if you want market updates, just go to rightsideofthechart.com. You can subscribe to the free daily email digest. It'll give you a summary of any public posts because a lot of the market updates I do will be in static charts, chart images that I post on Right Side of the Chart with some comments as to where the market may be going. So just an FYI, if you're looking for more frequent updates, again, videos are only part of what I do, a lot of screenshots on charts, and then again, a lot more within the trading room or even on the front page of the site. Some of those posts are restricted to members or free trial, people on free trial periods. All right, with that being said, quick update on the markets here. This is NQ. So the other day, or actually about the last week or so, I've had this line here measuring down here, focusing on this target. It looks a little blurry now because I added two levels there. I kind of zoomed in, but that's around 74, 68 or so. That was my minimum target, and that was hit today. And I added another line and posted this in the trading room earlier today, mentioning going short here and reverse. I'm sorry, covering and reversing off this level, 74.18. That's a new support level that I noticed here and added there. So we may or may not get a bounce off this level. We're at a pretty key inflection point in the markets, and that's why I wanted to do this video right now. What stands out to me, and again, we'll get to the charts of QQQ here in a second as well. So this right here was flagging type action. So you had the flagpole right here. Probably better if I use a white line on this chart. Let's do that for you, clear that out. So there it is. So you had what appears to be a bear flag type pattern that's set up in the overnight session. There's your flagpole. So by that metric, if you're familiar with bear flag patterns, and if not, just Google that, they're continuation patterns. You take the length of the flagpole leading up to the flag formation, and you add that to where it broke down. So that comes in well. That's not a be all end all. That's just a measured target for bear flag patterns. Some go more, some go less. But you'd be surprised how often they play out pretty symmetrically like that. So again, we're at that measured target. There's some decent support. It's not an arbitrary level. I would never add a line that's arbitrary. There's a reason, a lot of reactions that I see off that level. And so there it is. So we either bounce here. It's a pretty important support level. If we continue to go down, I'm going to move out to the QQQ daily charts here in a second and point out some of like I said, the important technical developments and where we're at right now in the market. So there's NQ. So I'm favoring a bounce here, at least intraday, a stick save, and maybe print a close on or above the daily trend line I'm about to get to here in a second. Before I do that, let's just look at the futures on the S&P 500 as well. Let's see. Okay, here it is. ES. So ES is held up a little bit better, and I mentioned that a lot that I trade NQ over ES or I trade QQQ over SPY because you get more bang for your buck. Especially lately, the charts were confirming the tech stocks have been in a, I don't want to call it a bubble, but they've been in what the market participants have viewed as an invincible mode, and I think they got ahead of themselves. And again, maybe I'll get to the chart of Apple and show you something I posted for members recently that broke down from a 60-minute bearish rising wedge pattern. But again, because of that, everything crammed into those top heavy tech components, you have much more bang for your buck on NQ, especially recently on this move down. So as you can see, NQ hit and exceeded my minimum target, where SPY now is just coming up on that target. Again, this is a target I've been covering for the last week or so here, 2864. Bigger picture, I don't want to spend too much time recapping. Again, you can just check the old videos, but there's the uptrend line, your rising wedge pattern. So it's not as if this move wasn't priced into the charts, and you can blame it on whatever if you want to blame it on, the all the buzz about the government getting hot and heavy on the social media companies. That has nothing to do with it. If that had happened when the charts were constructive, they wouldn't even have faced. So it was priced into the charts. And again, sometimes there's a catalyst, and if there's not, the press, the media will assign any reason they can find to a correction. But again, this one was clearly priced into the charts. There it is. We broke down. There was that minor support, 28.94. Once we broke down below there, we back tested it. So this one, I'll tell you, sometimes you don't get many opportunities on a short side trade because stocks tend to fall a lot faster than they rise. But on this one, you had plenty of opportunities. Sell signal number one, a breakdown. Sell signal number two, a back test. Sell signal number three, a break. When we finally had a convincing break here, we back tested it for a while. So there were a lot of opportunities to short, even ES there. And but again, the point I wanted to make is we're coming up on pretty decent support there, as I just showed you, QQQ or at least NQ is at support. Um, so I do favor a bounce here, but again, we're going to get to the longer term charts here in a second, the daily charts. But let's just start with the 60-minute charts of QQQ. Worth noting, we broke this trend line. I have this trend line actually goes back to right about here in April. I'll call it, we have almost a reaction there, but this was our first reaction, and we're below that trend line now. Let me go back to the 60-minute chart. You can see. So there's a trend line that has been taken out on the QQQ 60-minute chart. You can see we're coming up on support here about 180 or so, and there were divergences and everything else there, so that's not good. There's T1 on SPY. Like I said, on ES, I showed you a minute ago, we're a little bit above my first target, and the same on SPY. I know there's a lot of lines, and forgive me on that. This is a busy chart, but let's just zoom in here and take a look at where we're at on a very near-term level. There's a big gap right here, back from the 20, what was that, the 27th, I think, and so we backfilled that gap with this big red candle. We almost backfilled it there. We had a full backfill today. Now we're below it. So we broke the bottom of that gap. That was support, 287.65. We're just below it now. That puts the SPY in a pretty precarious situation. If it can't snap back soon and take back the bottom of that gap, then we're probably going to continue on down and hit that first target there. But let's go out to the daily charts, because this is where, and I always talk about, I focus on the 60-minute charts for you know, active trading, day trading, swing trades lasting a few days. But then I try not to forget the bigger picture, which are the daily charts. So here's SPY. This is one version that I have, but this is a trend line. So we're comfortably above this uptrend line, which comes in off the early April lows. That's April 3rd right there. And as well as this pretty significant support here, about 279.67. And that's my first swing target. I do think we get there soon. Just we may bounce first because again, let's look at what's more important than SPY really is QQQ. This is where the money has been flowing into these big FANG stocks. Yes, most of those stocks are also in the S&P 500 as well, but they have a much higher weighting in QQQ. So this is what I've been highlighting recently. Here's our a pretty important level here. Let me just color code it. Well, no, we'll leave it this way. What you see with this line up top and the line on the bottom. This is our divergence line. This really points out the negative divergence that's been building on the QQQ daily time frame. You can see it. And this is the uptrend line or the bottom of the rising wedge that these two lines together make up. You can see now we've taken that out. And we're pretty well below it. Uh, I I also said this. Somebody asked me my near-term outlook in the trading room today. Uh, we're at this sweet spot of the wedge. I'm favoring a bounce today, and maybe park the indexes right on that trend line because we haven't visited in a while. So I'm leaning towards a bounce back into the close today. But I do think this wedge does break down soon because this is what I call the sweet spot of the wedge, where wedges usually break down, give or take around 70% towards the apex of the wedge. The apex are where the two lines would converge somewhere over here. Um, you usually don't see it break, prices wedge all the way up to the apex. So that's one thing to keep in mind. This wedge, in other words, is it's fully mature. It's ready to break down at any time now. But this is a pretty significant trend line, and in the very near term, we're a little bit oversold. Doesn't mean we can't break it today. I mean, we're below it right now. So what you want to see is a solid daily close, and if and when that level goes with conviction, targets here 178 and then 169.60 and or this trend line, which will probably come in first. That's a long-term trend line. That one goes all the way back to the lows in 2015. So it's a multi-year trend line, very significant. And based on this wedge pattern, I think it'll be hit by the end of the year here, which is only a couple months away, and it's about a 6% drop from current levels. But very near term, let's look at the 5-minute chart. This is something I posted in the trading room today. We have bullish divergence. You had a lot of volume here. That's possible near-term selling climax. You can see the divergence I pointed out right here. Excuse me, made a comment that this first bounce felt very heavy. We were moving up, but it felt very heavy, and I said we might get another thrust down to retest or slightly undercut those lows, and that's what's happened so far. And it did so. It kept the divergences well intact. In fact, they're a little bit stronger right now. You can see we had divergence at this point, and we continue to have divergence. So if this 5-minute chart plays out, which I'm leaning towards, we'll get a lift up towards, these are targets. I usually don't give price targets for trade ideas. This is not an official trade idea, but if you're usually this is stuff I post in the trading room for members of the site, but you can see targets here. I'm looking for a bounce back to at least 182.84 and possibly up here to 184.26. That would probably be the upper end of where I think this bounce will take us right now. Let's just see what happens. We may not even get there, but what you want to see, and by the time you watch this video, this will have either taken this out or reversed and burned through these divergences. But you want to see them take out this previous reaction high from today. Here's our daybreak line. So in other words, this is all the trading today right here. We had that rally early on. It was fizzled out. We went undercut it, made a new low. So if they take that out, you'll probably see a pretty quick ramp up into the close somewhere around here. And what that'll do, again, this is you zoom back out to the daily time frames, and what it would mean is an intraday break. And that's why I often say if you're trading on the daily time frames, all that really matters are your closing candlesticks at the end of the day. Intraday breaks, there's one right there. You can see this doji. You look at the long shadow. We broke that trend line there. We haven't had an intraday break of it yet, but if we came back up, then what you would see is the skinny part down here, the shadow or tail they call it on the candle. And wouldn't surprise me to see them park the indexes right on that level. Now, keep in mind, I'm leaning slightly towards that scenario, but we're below it now, and we could see there were a lot of longs trapped in recent days. You can see the QQQ now in the last 3 days has wiped out 1, 2, 3, 4, 5, 6, 7, the previous 7 candles. So a lot of trap longs that chased this rally thinking that these stocks were bulletproof and the market was going to go up forever. And they're feeling the pain now. So if they decided to sell, cut their losses, or those that bought in here and they don't like the action, you could see a dump into the close, and we could print a solid close below that level, in which case that's probably going to take us down here, I would say tomorrow by the end of the day or early before the end of the day, probably hit that 178 level, and that is about, give or take, another 1.7% lower. So that's the outlook for the Qs. And again, you look at this wedge, and it's really at that sweet spot. If we do get a bounce up here, I think it'll be short-lived, and I think that breaks down. Um, But we'll see. I don't think it's time really, unless you're a very nimble, active trader. You want to game a quick intraday long bounce. I think if you're short and you were able to short recently on any of those sell signals, multiple sell signals that we had, probably best just sit tight and ride it out. And you can set a stop at break even. As I told you, I'd share Apple. This is something I've been highlighting this week in the trading room. This bearish rising wedge, stating that we'd get a sell signal and a break of below the uptrend line, which we did today. There it is, that yellow line right there. That dotted line is yesterday's close. And so we got the breakdown earlier today, and that was a drop so far about 2.3% in Apple. It was the world's largest company. We got a quick trade, but again, the Nasdaq 100's that support. If I'm trading Apple personally, now I'm not. My go-to trading proxy is NQE minis, but if I were to have taken this short, would have closed it out when I close that NQ, because when NQ bounces, Apple will bounce. You get a lot of inflows. If NQ rallies off this support level, that's going to have a little kickback rally in Apple. So where do you go with this? Well, your objective time to short was on the breakdown. If we get a kickback rally up to the breakdown point, or even a back test of the wedge, that would also be an objective short entry. But you can see it was these negative divergences in place that indicated we'd get a break of the wedge, and there it is. It broke down right around where it should. That's where a wedge breaks down, not over here in the middle part, not at the end, but right about here in the sweet spot. And there's the price targets for Apple. Also on the site the other day, I listed Microsoft as a short setup with a break below this 111.14 level. As we had a breakdown of this trend line, we hit that 114.11 support, kick back tested the wedge, and then once we broke it, you can see, as so often is the case in technical analysis, that was support, and then the heavy selling came in, and so that was good for those of you that took that. A drop of about 3.4% so far in one of the world's largest companies, and still, again, you can see my targets here. I think there's more downside. Maybe a kickback rally first. I think if we get back to 110.20, that looks to me a pretty objective level to reshort, add back a short that you covered here, do what you want, and then a swing down to here to this target T1 or T2 at least. I think T2 is kind of where my eye is right now for Apple. I'm sorry, Microsoft. And then just to wrap it up, because I've been sharing this one, it's an unofficial trade idea on the public videos, is VXX. Still looking good. You had this divergent low here. You had a 34% rally. The divergences were only extended. That's why it's DL2, not DL. DL, that's a single one and done divergent low. This is a consecutive series of three divergent lows. The final one culminating in preceding a 28% rally. But there it is. So we're starting to move up, and now there's a nice downtrend line that's formed as well on VXX. So watch that pop above there. It's still, potential to go from where we're at. We've given up some of the gains today. We're only up about 3.3 on this. It was up quite a bit higher earlier, but there's still about another 28, 29% to that target up there. I should clarify here. This is 39.62. I don't know where 39.10 came from here. I must have moved that. Forget about this, guys. That's not correct. This level here, it's not adjusted for an optimal fill, but that's around 39.59, that level there. So I think we get there, and it's not coincidence that a break of this will most likely coincide or come right about a breakdown of that trend line on QQQ. But you want to also see, don't forget about SPY. QQQ Tech sometimes has their own little problems. Sometimes the fangs get overheated. That happened once a couple months ago. You need to see this trend line break. When this one breaks in that 279.80 level, then things will probably start to get ugly in the market. All right, let's wrap it up here. We'll keep an eye on what happens. But again, the markets are at a precarious level. We may bounce today and into tomorrow possibly, but watch those key levels that I talked about on the daily chart, and if those go, it might have a swing shorting op that could last for anywhere from a few days to a few weeks to even a few months. And of course, if you're bullish, every level I've covered are support levels. And if you've been looking to buy the dips or buying the dips, and those are levels you want. SPY, I showed you ES. We're almost to a minor support level there. So maybe, but it's these divergences right here and on QQQ that right now put me in the mode of waiting for breaks of support to short or add on to shorts. rather than looking to buy dips for the next, leg up to new highs. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.